What happens to the economy and what happens to the equity markets? Can the equity markets persevere even if real estate markets do not?
They can, but it won't be as easy. You know, the good thing about this economy versus the 2007-2000 financial crisis is that we're not so overextended with subprime mortgages. You know, people that can't maybe afford one home aren't owners of 4, 5, or 6. So I'm not looking at this scenario as being as disastrous as what we saw back then. And I think a lot of the damage has already been done. You just heard about refis down 86% year over year. The values of our homes are coming down. And I think that's what the Fed wants. I mean, they've got the gas down on the pedal because they want these valuations to come down. Would it have an effect on the stock market, Brian? Absolutely. And the bond market's telling us it will. I mean, if we look at the 10-year conversion, the inversion, excuse me, it's at the deepest, steepest part that we've seen in over 40 years. So they're sort of flashing a little bit of red, and I think your point's well taken. But it doesn't mean the stock market has to go through a massive correction. I think it just delays the return to normalcy and extends out a bottoming process.
Yeah, what's the next major thing then on your radar, Kevin? Obviously, everybody, you know, we're watching the Fed meeting. I get it, December 14th. Will they raise a half or 3/4? I'm going to say something that I probably shouldn't, but I'm tired and grumpy. I don't care. I don't think the market cares, right? 75 basis points or 50, it's what they say and what happens next year, right? What do you agree with that, or am I just being tired and grumpy?
No, you're tired and grumpy, but you're totally right. I mean, Ebenezer Scrooge is the new face of the Fed, and your point is well taken. That meeting, what they say on February 14th, not what they do, is so important. Where's the terminal rate? We'll get a new dot plot, and we want to see how far they want to push it. And I could make a case, Brian, that the Fed's already pushed the U.S. consumer too far. You know, here we are sitting in front of Thanksgiving, Black Friday, Cyber Monday. This is the time that retail sales and the U.S. consumer take front and center. And I get it. Black Friday is not the same as it used to be. I saw all kinds of sales even before Halloween. But it's still really, really important because the U.S. consumer, they've been the pillar of strength since the depths of the pandemic. And what we're seeing now is that consumer sentiment is breaking down a little bit. It was up in August. It was up in September, but it was down in October. Now, we'll get another read for November today at 10 o'clock, but I would expect that their views on the economy are tepid at best. So I don't know. Is Santa Claus coming to town this year?
Well, yes, Santa Claus. My son maybe watches the show. I don't know. Who knows? So, yes, Santa Claus is coming, honey. Everything's fine. What about 2023, though, Kevin? We've remarked many times that stock markets can go up even as rates rise. 94, rates soared. 95, the Dow soared. Do you have an early read on next year?
You know, it's tough to predict next year because we still have 6 or 9 months to sort out what the Fed's going to do and how the economy and inflation will react to what they've already done. But if I'm talking about next year, I'm thinking the first half is still going to be range bound, a bottoming process. There's by no means an all clear signal. There's not a fundamental reason for a bull market to start for an extended basis just yet. But the second half of the year can certainly be a much better story. And I think in truth, that as we sit here next Thanksgiving together, you won't be grumpy. The markets won't be nervous. We'll be celebrating a much, much better outlook for 2024. But 2023, I think, is another year where we're going to have to just sort through a lot of data. I don't see a big sell-off. I'm not nervous about a panic, but I think next Thanksgiving we'll have a lot more to be thankful for.